The Dow just dropped over 1,000 points. Global markets are in free fall. And the US just hit China with a 145% tariff. So yeah, buckle up. Because what you're about to hear could seriously change how you shop, invest, and even plan your job future. Let's break it down. Today we're diving into the economic punch that just landed between the US and China. Starting right now, the United States is slapping a massive 145% tariff on Chinese imports. This is in direct response to China's 84% tariff on American goods. So what happens when the world's biggest trading powers enter a tit-for-tat tariff war? We feel it fast. From the price of phones and clothes to interest rates and unemployment, this is going to hit hard and quick. So I want to walk you through what just happened, why it matters, how it could affect your wallet, and most importantly, what you can do to get ahead while everyone else is panicking. Because while most people freeze, smart people prepare. Let's go back to the beginning. This story doesn't start in 2025. It starts back in 1979. That's when the US and China normalized diplomatic relations. Over time, international money flooded into China. Factories opened. Labor was cheap. Infrastructure exploded. And by 2001, China joined the World Trade Organization. That gave them massive access to global trade. And here's what happened next. Over 400 million people were lifted from poverty. China's economy grew 11x. They became the world's largest exporter. And many began calling them an economic miracle. But there was a cost for us. The US outsourced 6 million jobs overseas. Corporations cut costs while workers got left behind. Cheap goods flooded American shelves. And while that helped keep prices low, it made us more and more dependent. But here's the kicker. As China got stronger, they played the game differently. They started subsidizing key industries, devaluing their currency, controlling raw materials, and locking out companies that didn't play by their rules. Members of the WTO said China was gaming the system, and tensions began to build. Fast forward to now. The US imports over $430 billion worth of goods from China. In contrast, China buys only $143 billion from us. That's a 3-to-1 trade gap. So the US wants to level the playing field. Trump first proposed a 20% tariff. China hit back with 15%. Then we hit them with 54%. Then they returned with 84%. And now? We just went nuclear. A 145% tariff on all Chinese imports, no exceptions. Even small shipments under $800 that used to be exempt are now taxed. And the ripple effect is going to be massive. Let's talk numbers. Some estimates say the price of an iPhone made in China could rise by $800. That's a 67% jump. By contrast, one made in India might only cost $45 more. And Amazon has already warned customers to expect rising prices. This is no longer just about governments. It's going to hit consumers in the face. Here's why this matters. Nearly 14% of everything Americans buy comes from China. And China buys more from us than any other country, about 7% of our exports. Both economies are deeply intertwined. So what happens when you rip that apart? Let's break it down. Benefits of trading with China. Lower prices for consumers. US companies earn billions from Chinese markets. Over 1 million US jobs are tied to exports to China. China specializes in production at scale, steel, electronics, etc. Huge market of 1.4 billion potential customers. But there are downsides. US manufacturing jobs declined from 25% of the workforce in 1970 to 8% today. National security concerns over tech and data currency manipulation and unfair trade practices. Labor rights violations and ethical concerns. This isn't black and white. It's a chess game with billion-dollar consequences. And right now, it looks like no one is backing down. China said they'll fight to the end. Trump paused tariffs on everyone except China. Our Treasury Secretary says China is the worst offender, and China is now cutting its own deals with Europe to sidestep the US. This is getting messy. If you're getting value so far, make sure to like this video and subscribe because the next part is where it gets really real. Let's talk impact on you. How will 145% tariffs actually affect the average American? It starts with prices. Even though the tariff applies to the import cost, not retail, the markup will be passed to you. Here's an example. A Chinese-made shirt that costs $2 to make and $6 to import sells for $30 in the US. Add a 145% tariff to that $6 import cost. That's $8.70 in new tariffs. So the new cost to the retailer is $14.70. Retail price? Now closer to $40 or $70. That's a 49% increase for the consumer. Multiply that across all goods and you start to feel it fast. And the stock market is already reacting. Bond yields are climbing. Interest rates are likely to follow, which means higher mortgage rates, more expensive loans, lower investment, and potentially rising unemployment. So what should you do about it? Here's how I'd prepare. Cut back on spending and live below your means. Invest long-term in quality assets. Buy now what you might need over the next few months. That doesn't mean panic buying. But if there are essentials you use regularly, now might be the cheapest they'll be for a while. And while you can't control policy, you can control your reaction. Look, this whole situation is changing by the day. And even while filming this, I had to re-record sections to stay up to date. It's possible that both sides pull back and cut a deal soon. It's also possible this spirals into a full-scale economic war. If that happens, manufacturing may shift, but that could take years. And any incoming administration might undo the whole thing anyway. Businesses hate uncertainty. So for now, many will just wait. That means slower investment, slower job growth, and more cautious spending. So what's next? Well, Biden has supported strategic tariffs, especially on EVs and semiconductors. Trump is going big on China. And the global economy is watching both. What happens now depends on diplomacy, timing, and leverage. Personally, I think we'll see a temporary pause to negotiate. But even if that happens, damage is already being done. Prices are rising. Uncertainty is spreading. And it's only a matter of time before it hits your pocketbook. So be smart. Stay informed. And position yourself to benefit no matter what happens. Because when the world is in chaos, there's always opportunity. And if you want to stay ahead of the curve, make sure to like and subscribe so you don't miss what comes next.